war headline hit, most people think one thing, and that's market crash. But that's not how market actually work. See, market don't move off emotions; they move off money flow. So let me break this down in simple terms so you can better understand what's going on. When geopolitical tension rises, three things usually happen. Money moves to safety, oil reacts, and stocks adjust expectations. That's it. So first is safety. When uncertainty increases, big money doesn't gamble, it protects. And protection usually means gold, the US dollar, and bonds. Gold is insurance, the dollar is liquidity. Bonds are protection. That doesn't mean the system is collapsing. It means investors are repositioning. Very different. Second is oil. Iran is a major oil producing region. Any disruption, even the possibility of it, can push oil prices higher. Even when oil rises, inflation concern rises. And when inflation rises, stocks can feel like very pressure, not because everything is ending, but because growth becomes more expensive. Now let's talk about stocks. So stocks don't crash just because of war headlines. They reprice based on future expectations. The real question is this fear? Or is this structural damage? Because 2008 was a credit collapse. This is a geopolitical risk event, two completely different environments. So instead of guessing, let's look at structure. Is gold breaking higher? Is the dollar holding strength? And is S&P actually breaking weekly structure? Or is it just volatility? Because until structure breaks, this is rotation, not collapse. So let's go into the chart to dive in deeper and see what's actually going on.
All right, so let's dive deeper into these charts so we can see what's going on, so you can have more clarity on how to trade smarter going to next trading week. All right, so right now we're looking at gold on a weekly time frame. So, like I told you before, as as tension continue to rise, right, people like put their money into safe places, and gold is one of them. So, for as we remain above the 5,000 level, we can see potentially price going to 6,000 eventually at some point if we can stay above 5,000. And so far, we can see how we have this nice little uptrend. For those who've been keeping up with my daily market breakdowns, like I've been telling y'all, if we have remain above here, we could be seeing price move higher. Right now, we above this level here. So as you can see, looking at from a structure standpoint, we can see price making this swing high, making a higher low, which is lower than higher than the previous low, breaking this high, making a higher high. And right now we at the retest. So even though it's kind of choppy, um, it's still in a bullish momentum, bullish structure. So I'm continuing to be bullish, especially with tension going on. And we close bullish on the weekly time frame as well too. So that's my output for gold right now. And then let's go to the US dollar as well. Let's see how US dollar did. So as we can see right now on the US dollar, we're still currently in a transition phase, right? If we look at the overall picture of the US dollar, we can see how we're in a transition phase, right? What that means is we're in a downtrend, but price is showing potential signs that we can reverse up. And usually when tension is going on, that is usually some good sign to see, US dollar, go up, right? So, but right now we are currently in this downtrend on the weekly time frame. We can see here previous history that price continue to reject off the support level. So we're going to see if price can, it did close indecisive. So we want to see if price can break above this, right? Turn this to from resistance to support level, showing signs that can break above here. But I can say if the US dollar can ever break above here, then we can be seeing price start pushing up even higher, But right now we are currently in the transition phase, so we just need to wait to confirm. So right now we are on the daily time frame. We can see how price is also in a transition phase. We was in this downtrend, right? On this resistance, right? If price can break above here, retest, then we could be seeing US dollar continue to push higher. All right, let's go to oil. So oil has been slowly rising, right? So with tension going on, especially with what's going on and everything, this actually support oil to go up. And so far, oil is already showing a nice uh little trend going on right now, right? So you can see here that right now this is our next support level. So we want to see price break above here. Now I've been kind of looking at the history of oil and seeing how oil moves, right? And from my understanding, oils retrace up and down at 14%, 24%, 34%, 44%, and 100%, right? So right now, if we look at it, right now of this retracement, and that's on both directions. So right now, we look at it, we at a 23% retracement. So if price break above here, then obviously this would be my next level to see oil continue to rise up into, which would be here, which is at around 33, 34% of retracement going up. So we can expect oil to be rising up because, like I said, when you have war like this going on, that make oil goes up, and we already can see how we in this nice little uptrend already. And let's see what S&P is doing. So S&P, like I told y'all before, for those who came up with a market breakdown, we can see how we had a nice strong trend going on, and we can, we can see this trend slowly slowing down. So if it happens to break below here, right, then we could be seeing S&P continue to drop lower. Let's look at the weekly time frame real quick. So on a weekly time frame, like I said, we can see how we in this nice uptrend. Now, as long as we respect this level right here, right, then yeah, S&P will continue to rise up higher. But once it break below here, then this will be a clear sign to see price start dropping lower, right? And let's look at the VIX, because the VIX plays a huge part of S&P. So from my understanding, studying the VIX, right, VIX, with fear going on and everything, right, you can see VIX is right at 20, close to 21. If the VIX is above 22 and rising higher, just from a history standpoint, that usually make S&P drops lower. So right now, we have been pushing down off this level. So if you look at the history of this, we can see every time it comes to here, it does reject off of this. But we can see once it breaks above here, right, then that's a huge no for S&P. And why S&P is very important to understand, because if S&P is dropping, that's a leading indicator for all other stocks. So if S&P is dropping, right, then guess what? Then we know mostly other stocks is dropping. So, and the VIX can help you understand what's going on with S&P. So if we break above 22 and start going higher, then at that point that'll be a huge sign to see price drop, and as well as a confirm to see S&P break below here and retest going lower. So that's my market breakdown for this upcoming next week, and I hope this gave you more clarity so you can be able to trade smarter. As always, the goal is not to try to avoid losses. The goal is not try to catch home runs. The goal is to survive long enough in this game so it can be profitable. And I see you next market breakdown.